All right. Hello, everybody. Welcome to Korean Atlanta Mentorship. And we're just going to do another Velocity Banking review. And this time it's going to be I'm rich but broke edition, right? So when you're rich but still broke, making good money, $500,000 a year, and you have zero in savings left over. And I think $500,000 in annual salary translates to 36 grand after tax. And we're going to assume our expenses are exactly the same and because we have an insane amount of debt, so we got these huge, big league credit cards. I don't know if they actually give these in real life. And then we got two auto loans, right? So we got two nice cars at the $50,000 mark. Those aren't not new trucks because they'd be, if it were a new truck, I think it'd be like 90K. But we gotta maybe we're a professional. We found a sweet career, and we have a $200,000 student loan, and we have $1 million mortgage, and also our general expenses equate to about $4,000 a month, like food, gas, insurance, and all that good stuff. So what we're gonna do is we're gonna dump all of our money into debt using this thing called velocity banking, and we're just gonna redirect the flow of money. And the difference between the average American and a velocity banker, we don't talk about it in terms of income. The difference is what's your main operating account. So here, your main operating account is your checking account, whereas here, your main operating account is your line of credit, right? And so when we do our expense breakdown, when we do our budget, we have to list every single debt that we have, right? And our whole goal is to get rid of the debt, right? And what the difference between this side and this side is that here, we're ashamed that we have zero savings. Here, we're deliberately going to have zero savings throughout the entirety of our debt payoff journey, right? So if we take a look here, this is me. I have $0 in my savings account. And so once money comes in, it just goes right out into our line of credit, which will be what we call our main operating account. And then we're going to pay it off using what we call our cash flow. Now, realistically, well, actually, let's explain this first. First of all, what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and use it over and over again, right? So this is my home equity line of credit where I can dump up to $280,000 into my checking account, and they'll charge a 7.5% interest rate. Okay, so that's what they're going to do. And so what we're going to do is we're going to use an $800,000 line. We're just going to assume it's free and clear. Actually, whoopsie, free and clear. But here's the thing: if you're broke, right? Bank ain't gonna lend you money because banks don't lend money to people who need it. Now, there might be some exceptions here or there, right? Maybe we might get a line of credit because we might have a ton of equity in our house, and the bank might see that and say, "Hey, I might lend you a line of credit, but for most people, you ain't gonna get it. Why? Because banks don't lend money to people who need it, right? All right. So let's go ahead and assume we have an $800,000 home equity line of credit at an 8% interest rate. And this is what we're going to do. We're going to move some debt into the line of credit. And then what we're going to do is pay off that debt using our cash flow. And we're going to put our paycheck into the line of credit, take our expenses out. And then you'll see this cash flow magically go up, right? So 270, 300. And let's see how much credit card debt we have. We have $720,000 of debt. So we have $720,000 of debt here. Guess what happens by simply moving this $720,000 of debt? Okay, well, we move these three um, uh, credit cards, right? We move these three credit cards. Yo, take a look at that. 23,000. How do we literally go from $0 to 23,000? Oh my goodness. That's insane. Let me dramatically zoom up. Oh, whoa. Whoa. Whoa, that's insane. All right. So let's go ahead and do this. And final step is paycheck into line of credit expenses out and then rinse and repeat over and over again. And so by every single month, we should go down the line of credit balance should go down about 23 grand. Let's go ahead and do this, which is 23,925. So to get the next month's balance is based on the previous month's balance, interest minus our cash flow. And then what we're going to do is take the average daily balance, multiply it by the interest rate, and then divide by 12, right? And now I'm going to copy and paste. And then we just see that sucker going down, 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 down. And then we see in about 34 months, oh my goodness, it's gone. All right, so let's go ahead and do this. So 34 months, and then this is gonna be 720K, right? All right, and then this is gonna be, we're gonna use our loan calculator, figure out what the balance of these loans are. All right, at 34 months. And we use something called the cash flow index to help us figure out which debts to pay off. So if you've never heard of it, it's just a simple formula. Look it up on the internets or the Googles. And the lower the number, that's the debt you want to pay off. So this is what you're going to do is that you take the lowest numbers and move them to line of credit and you'll get the max cash flow for paying off the debt. So for example, do you want to pay almost $1 million to get $4,000 of cash flow back? Or do you want to pay, less than that to get half of that, like $150,000 to get $2,000 cash flow, right? Or these they give you more bang for your buck. So let's go ahead and add these up, right? I'm going to add that up. And so that's going to be 47 grand. So let's go ahead and move this 47 grand of debt into the line of credit. Okay. So that's going to be plus 47459.17. And then, all right, so this is going to be 0, 0. And then now our new cash flow is 25 grand. Whoa, we went from 23.9 grand to 25 grand. We're super rich. All right, so now we're feeling the wealth. All right, 25,828.18. All right, and then we see that in 2 months, whoa, it's paid off. All right, excellent. Okay, so now in 36 months, it is what, 720 plus 50 plus 54, which is 824K. All right. And then now let's go ahead and tackle that student loan. So it's student loan at 36 months. All right, let's do it. 0, 0, 36, 36, 153,000 balance. Now, I'm okay moving this one into the line of credit because it's got the 7% balance, which is very close to 8, very close. So let's go for it. Let's move this into the 8% line of credit. And I'm just going to go in right here and copy and paste. All right. So plus 153,860.65. Let's see how long it takes to tackle on that student loan. This is 0, and then this is 28 grand. All right. And I'm just going to go here. And then this is going to be 28,150.35. All right. So in 42 months, we are completely paid off on the student loan. La di da di da. See how easy it is being rich? You just gotta kind of manage it a little bit better than your average bear. Well, that's not what Yogi Bear says. So this is gonna be 1024K, about a little bit more than a million. And then at 42 months, we gotta figure out what's the balance of this $1 million loan. And the question of the day is, do we want to move this $924,000 loan into a 3% loan into an 8% line of credit? The answer is it doesn't give you enough cash flow to justify this, right? So if you look at this cash flow index thing right here, the higher the number, the worse bang for your buck you get in terms of cash flow. So who wants to pay $1 million to only get $4,000 a month, right? We got to think about our ROI or rate of return, right? So no thanks to that. But there is an easy way to pay this off still with the line of credit, not segregate your income, and not think about it, right? That's the beauty of the strategy. I don't have to think about it. We're going to use something called chunking. So basically, all chunking is just moving a piece of your loan into the line of credit. And what we're going to do is just do a $40,000 chunk right here. So plus 400,000. Okay. And then, all right. Whoa. Did it not? Oh my goodness. Wait. Oh yeah. All right. Hold on. Did this pay off in 1 month? That's insane. So we'll just add another $40,000 chunk right here. Oh my goodness. Oh, I did 4,000. And look how fast it pays off, about 1 month. So every 1 month, we just kind of cycle 40,000 into the line of credit, and then let's see how long it takes us to pay off that $1,000,000 mortgage. Give me one moment to open a Velocity Banking calculator. There we are. Let's open up the Velocity Banking calculator. So this is gonna be $1,000,000 mortgage. So it's gonna be 1,000,000,000. All right. And then 3% in the 30 years. And then this is going to be 924,106.34. 924,106.34. 106.34. Whoopsie. All right, 4216.04. 4216.04. And then, all right, so now let's go ahead and do this and add. All right, what am I even? Oh, the income. I don't even know. All right, 36366.39. So 36366.39. And look at all that massive cash flow we have. My goodness. So basically, all it is everything. When we put the expenses, everything except for the loan we're trying to pay off, and we'll just do a $40,000 chunk monk, 2.5 years. Wow, that was easy. And then note the difference between doing a full replacement versus a chunk. So, whoa, 2.7 years, but look at the amount of interest that we pay. We paid 70 grand in interest more by moving this loan into a line of credit. You see that? So you pay more, a little bit more in time, but you pay a lot more in interest, folks. That's why we don't move 30-year mortgages entirely into a line of credit. That's a no bueno. Okay. All right. So let's go ahead and do this. And I'm going to, what am I going to do? I don't even know. All right. So, 0. All right. So 0, 42 months divided by 12 plus 2.5. That's 6 years. We are debt free. Woo! How much was that? So that was basically about $2 million of debt. $2 million of debt. Wasn't that easy? Just 6 years. And we're paycheck to paycheck, folks. And people be freaking out. Oh my goodness, I have all this credit card debt. Not a problem. All right. Well, that's it for today, folks. This is Korean Atlanta Mentorship. If you are interested in paying me money, go ahead and click the Google form link below. Other than that, have a great day, and I'll see you all on the next video. Cheers.